Alright guys, welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. While you guys are at it, go ahead and smash that like button. Really would appreciate that. Watch out for all the different bots in the comment section trying to get you to invest in Bitcoin and other types of investments like NFTs and whatnot. Guys, I will not invest your money for you. I just won't do it. So stay away from these spammers pretending to be me. They are not trustworthy. Well guys, what's going on right now in the Fed, in the economy, in the housing market, in the stock market? It's a scary period of time for a lot of people. But for me, when I was starting out, I decided for myself, when I bought my first primary residence for my own family, we bought at the top of the housing market. Shortly after, the housing market began to crash, and it was the time of the Great Recession of 2008. Now, and foreclosures were hitting a peak. In fact, there had not been so many foreclosures in such a short period of time than in any other period of time in history. And me and my family were very concerned. I won't say we were panicked, but I put a strategy together. I put a plan together. And my motivation was out of fear. I was worried, had a baby on the way, and I didn't want to be a statistic. I didn't want to be one of those folks that were losing their job, losing their home. So I said to myself, well, what can I do to make sure that we can survive this mess? And I sat down and I started a spreadsheet, and I made a plan. I decided I was going to eliminate as much debt as I took action on that plan immediately. In addition to paying off debt quickly, I also decided I was going to start building wealth. And I thought to build wealth, one of the best ways to build wealth was to trade stocks in the stock market. So I tested the waters doing that. But at the same time, I began investing in long-term assets, long-term stock market investments, index funds, ETFs. I had a few different investment accounts, had a 401k. By this point, I actually had more than one 401k investment account. But so I was doing dollar cost averaging into the stock market, building assets. And these are assets that I still own today. Never sold them. Never once sold them. But on the other hand, I had some other assets that I did sell. Now, these are the assets that I was buying and selling on a regular basis. These were very volatile stocks, Bank of America stocks. What else was out there? I was buying and selling, I think it was JP Morgan Chase stock, Wells Fargo's stock, and a number of other different types of financial services stocks, Citibank. And the reason I was selling these is because the volatility of these stocks was so high at the time. And so I was able to buy 2 to 3, 4, 5,000 shares at a time. And when I was buying shares at 5,000, when I was buying these stocks, I think it was Bank of America I was doing it the most with. I'd buy 5,000 shares of Bank of America. And the cool thing is when you buy that many shares of any particular stock, when it goes up by 1 penny, you made $50. Just like that. Stocks go up and down, 50 cents, $1 in a day. Some stocks can go up multiple dollars in one day. On stock, if you buy 5,000 shares and it goes up a penny, you made $50. But if it goes up $1, you made $5,000 in that day. So you can see how quickly you could make or lose a lot of money in a short period of time. Well, for me, guys, I made a lot of money trading stocks, but I also lost a lot of money trading stocks. But one thing that I did realize is that being a day trader wasn't for me. And what worked best for me and what allowed me to build my net worth and make the most money in doing was investing long-term into long-term holdings, stocks, ETFs, and index funds. So, Vanguard, in ETFs, investing in the S&P 500 indexes. And that is, generally speaking, where I would like to invest for long term. Now, I've got all sorts of other stock investments, stock holdings, but for the most part, I like to invest in ETFs and index funds. Now, they might be invested in the S&P 500, but sometimes I'll narrow down the focus and invest in ETFs that are mainly holding healthcare stocks, maybe tech stocks, FANG stocks, your Apples, your Facebook, your Netflix. Lots of long-term companies that I believe are going to be around in, say, 50 to 100 years and doing very well. The types of companies that evolve and continue to generate profits over time. So when I decided to improve my financial situation and build wealth, I knew I needed to eliminate debt. So I worked my butt off, took on extra jobs, created side hustles, and paid off debt as quickly as possible. Paid off my credit cards, Visa, MasterCard, American Express. Paid off my car, no more car loans. And I paid down my mortgage fairly aggressively. And I continue to invest in the stock market. I continue to invest in real estate. And those investment vehicles have served me well over the years. And I expect that these excellent investments, these long-term investments, mind you, will continue to pay off in spades going forward. So, regardless of whether or not we see a housing market pullback or not, I'm going to continue to invest in real estate. I've got rental properties now, and the rental properties will continue to be generating passive income for me and for my family for years to come. People are always going to need a place to stay. So as long as you have that real asset, those real tangible assets where there's a need, you'll always be able to generate some revenue. You'll be able to generate some income. And that is the name of the game. You have to continuously increase your cash flow and continue to acquire assets, regardless of what the Federal Reserve, is doing. Don't let them fool you guys. The name of the game is to build assets. Reduce how much high interest debt you're holding. Leverage your credit to build wealth. That is the secret to this. And before you know it, you could very well build yourself a $1 million portfolio, have a $1 million plus net worth. Now, $1 million isn't what it used to be. I think that $1 million net worth should be a goal and a target. But I think when you get near that target of $1 million net worth, you need to reset your target and aim higher. So guys, I think that these are some of the key aspects for wealth building. Eliminate high interest debt. Just eliminate it. It's not doing you any good. I'm not going to drive a luxury car, Mercedes-Benz, a Lexus, BMW, while being saddled with high interest debt. Just not going to do it. That's going to slow me down. Although I like these luxury items. I like nice things just like the next person. But I'm not going to allow a lavish lifestyle to prevent me from building wealth. And as we're seeing with this economy, with the layoffs being announced from companies like Walmart, Redfin, Shopify, many other companies, Bed Bath & Beyond. It's the Americans who are not in strong financial situations that this is harming the most. But if you've got an emergency fund that's covering you for a good 2 years, and you've got a good investment portfolio, you've got multiple streams of income coming in, you've got passive income being generated throughout your portfolio, either through an online business, e-commerce store, drop shipping, side hustles that are fairly passive, if not entirely passive for the income that they generate, you're going to be fine. And always be constantly working on building and improving your high value skills. You will always have a strong income stream. Ideally, multiple streams of income. So guys, drop me some comments down below. Let me know what you guys are thinking. Let me know if this information resonates with you. And I look forward to hearing you guys on the next video. Be safe.